Good afternoon, ladies and gentlemen. My name is Bernd Veslage. I'm the Chief Executive Officer of Kommunalkredit, and I have the pleasure of walking you through the highlights of the performance of Kommunalkredit today. Redefining infrastructure. Infrastructure is a business within which we do offer a wide product spectrum, ranging from advisory products over export finance, asset management, project finance to acquisition and corporate finance. Within our core expertise, we focus on a different subset of sectors containing energy and environment foremost, but almost equally communications and digitalization, as well as social infrastructure, transport, and natural resources, hydrogen. The second business pillar of Kommunalkredit, alongside focusing on the sector of infrastructure energy, is public finance, and again on public finance, primarily we focus on Austria. Our unique selling proposition is not only tailor-made solutions, but it's actually the swift implementation thereof. We have the benefit of working in an environment of high demand for sustainable and intact infrastructure, where we address the demand created by trends, whether it is the green transition, the decarbonization, the reconfiguration of European energy supplies and digitalization, and we benefit from a sector that has shown highly resilient as an asset class and that has shown largely independent of economic cycles, with actually structurally very low default risk. You see on the right-hand side the performance of the European infrastructure energy market over the past decade, moving from 80 billion to 200 billion in the year 2020, and then actually was quite a hike in 2021, improving from 200 billion to 300 billion annually. And equally, we have seen for the first 6 months of 2022, where the market has performed in the European context with 137 billion in relation to a year-on-year comparison of 80 billion in the same period of time the year before. At Kommunalkredit, we represent a highly experienced senior team. On my right-hand side, you see our Chief Risk Officer, Sebastian Fillinger, myself being a member of the Executive Board since 2017, shortly after the privatization, and Claudia Wieser, our Chief Financial Officer. Why are we so successful? I believe first and foremost, there's a number of success factors generically for sustainable and highly profitable growth, and then for Kommunalkredit in particular. Undoubtedly, we benefit from macro tailwinds of secular size. We have the announcement of the Green Deal in the EU since 2020, and consequently, the transition into renewable energy, the transition towards a decarbonized environment in context of a reconfiguration of European energy supplies. We have the digitalization agenda, and again, all the structurally low default rates in the sector. In context of those macro tailwinds, we are a specialist financing platform where we offer the before mentioned described wide product spectrum, where we have acted fast, agile, with the appropriate flexibility, and where we actually succeeded in combining interest income with complementary asset-light revenue streams, such as fee business, such as asset management business, alongside our second pillar of business, which is public finance. With our strong origination capabilities, with in-depth specialist knowledge, with the aptitude of providing tailor-made solutions, and actually with the experience that we do represent for many years in the industry, we have assembled on the platform of Kommunalkredit an outstanding industry expertise. As Kommunalkredit, we equally are acting as an ESG pioneer. As an ESG pioneer in the context of the EU taxonomy of the Sustainable Development Goals of the United Nations, but also in context of impact investment and in context of requirements relevant for insurance companies and pension funds that are regulated under the EIOPA regulation. Since ever, we have had a systematic foremost E of the ESG integration by the business we're doing. We do provide tangible impact on sustainable infrastructure finance by the business we're undertaking. We have achieved and accoladed numerous ESG awards, and we do actually have strong sustainability commitments, which I will be showing you in a minute. In the context of an infrastructure platform and an infrastructure asset class that is highly resilient, we have nevertheless demonstrated an impeccable risk management with a track record that is represented foremost by a 0% non-performing loan ratio, a highly diversified portfolio, and actually a stable funding and a strong capitalization. With the way we are set up, we are operating very cost efficiently. We are delivering to our investors attractive returns. We are focusing on high margin business and actually will benefit from growing interest rate environment. And in that context, we have evidence over the past 5 years an outstanding growth track record to benefit from the growth of the sector, delivering attractive returns. In that context, the platform that I do represent is a platform that is scalable, has evidenced its growth, and that is ready to expand in the product spectrum, in the context of which we are tapping today the market to raise further capital to foster the growth we would be seeing in the market. In our sustainability strategy, where we have anchored the business, there is foremost 4 sustainable development goals of highest priority to us. Foremost, last but not least, because we are undertaking every year between 40% and 50% of our new business in the renewable energy space, it is to deliver to the society affordable and clean energy. Followed by innovation in the industry, hence within the infrastructure, goal number 9, to support sustainable cities and actually living in communities where people love to live in, supported by the climate action. There's a number of sustainability development goals that are ancillary to our priority number 1 goals, and that is almost like a bycatch. Number 3, good health and well-being by living in sustainable cities and communities, the quality of education to our next generation, the provision of clean water and sanitation, decent work conditions and an economic growth supported by reduced inequalities. And in that context, Kommunalkredit has given itself for 2025 a number of sustainability commitments. Foremost, to accelerate the green transition, in addition to help improving people's life. At least 40%, up to 50%, we intend to invest in our annual new infrastructure financing to support the green transition. And up to 10% of our annual new infrastructure financing going towards innovative projects to scale new green solutions, and around about 30% of our investments into new infrastructure financing towards either social infrastructure or digitalization, communication that, with the paradigm shifts that we have seen over the past 2 years, have supported the living and the combination of work life for everyone in the constraints that we were facing in 2020 and 2021. In order to get there, we need to enable our key enablers. And that is foremost to help them and design ourselves for our employees a sustainable development goal impact curriculum that we want to have implemented by summer next year, where we will be training our individuals and where we strive that by 2025 we have 95% of our employees trained on the development to measure impact, to assess impact by the transactions we have supported. And the other key enabling element will be transparency, the responsibility to deliver with speed and with precision. As you're all aware, the EU taxonomy and the Sustainable Development Goals of the United Nations are not necessarily the same, and there are distances or differences in between. In that context, we intend to take the best of both and try to formalize and to phrase an environmental sustainability ratio that we want to have defined before the summer of 2023, and that will not only contain the green asset ratio, but many more. In that context, we will focus on the reduction of greenhouse gas emissions that we measure by 2024 in accordance with the PCAF termination, i.e. the Partnership for Carbon Accounting Finance, trying to deliver a net zero target. We will focus on 30% of our managers to be female by the year 2025, and we will eliminate gender pay gap by 2025, which is already at very low levels. With those in mind, we're looking back to a year of outstanding performance in 2021, where we delivered all strategic goals literally 1 year ahead of plan. You may recall from the past that we were operating towards 50-50-10, 50 million operating profit, 50% cost income ratio, 10% return on equity to be achieved in the end of 2022. Many of them we have achieved actually already in 2020. In 2021, we have accomplished all of our goals a year ahead. We were looking back to a record year for infrastructure energy market in Europe. The market has performed with 300 billion compared to 200 billion in the year before, regardless of pandemic, supply chain issues, or any other disruption in the market. Kommunalkredit actually has seized the opportunities in such changing market environment, and our new business has not only grown by 50%, it has grown by 65% when compared to 2020, to a total volume of 1.9 billion. Again, delivered with a 0% non-performing loan ratio, a delivery that we have sustainably provided since our privatization in 2015. We have tapped the capital markets with issuance in excess of 700 million, and we actually have delivered 60 million operating result, 26.5% up and ahead of the 2020 results, which already has been a record year for Kommunalkredit at the time. And we are proud that we have contributed to a number of green solutions, or actually to innovation initiatives that have been taken around green hydrogen, photovoltaic, and similar. With the tailwind in 2021, we have moved into a first half of 2022, which, regardless of the global challenges, and let me remind, the pandemic has not been over, it continued in 2022. In addition, something we would not have believed to ever see again in our generation here in the heart of Europe, waging war only 500 kilometers away from Austria. In that context, despite the global challenges, we delivered an outstanding performance. The infrastructure market remained intact, growth accelerated by the macro tailwinds that I described. The market performed with 137 billion and thus 71% ahead of the market performance in the first half of 2021, when it delivered 80 billion euros. Kommunalkredit in that case grew its own business by 37% and wrote new business of 932 million. And with the 932 million, we actually doubled our half-year results and lifted them by 100% to result before tax up to 52 million. That post is 30% return on equity before tax, and with this, we are probably one of the sector-leading institutions across the continent. We have issued in the first half year 400 million of covered bonds successfully, and we have no material impact from the Russian-Ukrainian war. The 0.0% non-performing loan ratio remained intact for the first 6 months. And more importantly, by August 2022, we have outpaced our infrastructure energy revenue results of the last year, and again are moving strongly ahead and expect an excellent financial year 2022. Sustainable growth of new business and loan portfolio is one of the key issues. There is demand for quality loans, and there is preparedness to price and to pay. The sector is resilient. It had been resilient to various economic cycles in the past. It is resilient continuously vis-à-vis the ongoing pandemic situation as well as the war. We face long-term growing demands to actually fund not only the energy transition, but also the diversification from energy-fueled sources. We want to move towards zero-emission mobility. We are moving towards an ever more digitalized working environment, and we will be facing demographic changes that do require different role models for elderly care and to the public health. Kommunalkredit is set up to swiftly adapt to changing market sentiments, as we have evidenced and shown in 2020 and again in 2021, with an increased focus on energy and environment as well as communication and digitalization, which indeed had represented 80% of our 2021 new business. In 2022, we foremost engaged in broadband, again in photovoltaic solar parks, in wind farms, and in water treatment. We have evidenced sustainable growth of our loan portfolio with a compound annual growth ratio of 7% over the years 2019 to the year 2021. With those deliveries and with that track record, we have delivered to the market a continuous growth of our infrastructure energy revenues with a compound annual growth rate of 61% over the years 2017 when we were starting the business to 2021. And I mentioned in August we exceeded the numbers that we have delivered for the total year 2021. For the half year, we increased our revenue contribution by more than 55%. Whilst at the same time, we do have a strict cost discipline and contained our cost under control. Cost had grown from 2017 to 2021 by a mere 3% compound annual growth rate. And again, we have managed very strictly our cost by growing from 28 million in the first half year of 2021 to 33 million in the first half of 2022. And that discipline, in conjunction with the revenue growth, has delivered an impeccable cost-income ratio of 41% for the bank and 47% of the group, where the difference between the bank and the group primarily relates to Kommunalkredit Public Consulting, our consulting arm that fosters subsidies into the green energy segments, primarily here in Austria. On the back of the revenue production, on the back of the cost discipline, we have continuously improved our operating result over the years 2017, when I started in the institution, to 2021 by a compound annual growth rate of 59%, and actually in the first half year to 40 million from 23 million in the same period of the year before, which represents a growth of 73%. That has resulted into a compound annual growth rate of 76% over the past year in our results before tax, and actually doubled our result before tax from 26 million in 2021 to 52 million, and increased our result after tax by 110% from 19 to 39 million for the first half year in 21 to the first half year in 2022. With those performances, we have delivered, in light of a strong Tier 1 ratio of 17%, a return on equity before tax of 29.7% and after tax of 22.3%, levels in a business that has no trading element, no synthetic business, are pretty impeccable in the context of that we provide financings to essential services that benefits the community. We help to create a better world by enabling sustainable infrastructure, where the infrastructure investments actually do represent a powerful tool for answering the social needs and fundamentally do increase the general well-being of communities. We continue to provide such tangible benefit to the community in terms of economic dynamism, urban development and renewal, job creation, climate change, and most importantly, social cohesion. In light of such sustainable growth trajectory, we represent a solid funding and a solid liquidity with a sound diversification of our funding between capital market instruments, whether they are covered, whether they are senior unsecured, on the one hand, and customer deposits on the other hand. On the customer deposits, we have a very diversified deposit basis with actually a very high share of term deposits, and we almost have a matched funding with 6.3 years weighted average term of our assets versus 6.4 years weighted average term of our liabilities. Kommunalkredit represents a strong liquidity situation with 276% liquidity cover ratio and 120% net stable funding ratio, resulting in 773 million total liquidity in terms of its liquidity position. Liquidity is one side of the equation. The flip side of the very same coin is our low balance sheet risk and our high asset quality, since we actually went private back in 2015. We're looking on a very diversified loan book across different regions within Europe, across different sectors, and across public sector finance on the one hand and infrastructure energy on the other hand, where public sector finance is primarily procured with Austrian municipalities that do benefit from an excellent credit quality. The loan book has a high asset quality, it's well diversified, it's well balanced with an average portfolio rating of BBB+, and 70% of our assets being in investment grade territory. Our capitalization is strong and it has a robust capital adequacy where we doubled our capital since 2015. We have a Tier 1 ratio at 17.3% with substantial buffers to the regulatory requirements of 11.1%. The capital position is boosted by a strong placement discipline and actually also the collaboration with our Fidelio debt fund platform that do represent a high balance sheet churn rate and hence an increasing fee income basis. That has been recognized by the rating agencies in the different ratings, whether it's in our covered bond where S&P Global provided us a rating of A+ with a stable outlook, S&P Global as well as Fitch in the senior unsecured, the BBB-, both with stable outlook, and DBRS recently confirmed the BBB flat again with a stable outlook. We are delivering not only a highly profitable growth, but we deliver it in conjunction with a high, robust capitalization. On the slides in my back or in your front, you do see over the past 5 years our performance in terms of return on equity after tax, which has been growing steadily from 6.1% over to 17.3%, and you see equally the return before tax as well as the Tier 1 ratio, where the Tier 1 capital grew from 265 million to 414, and we have a compound annual growth ratio of 16% of our capital. With those two elements, we have continuously driven profitability, growth of our revenue basis, but more importantly, by the complementary business elements of our infrastructure energy product slate, a huge diversification of revenues, whether they stem from advisory business, from structured export finance business, from private placements, or from asset management. I mentioned the impeccable risk track record in an industry that is historically an industry with very structurally low default ratios, and an industry that we have performed in over the past year, actually going through quite a number of various economic cycles and crises that are unprecedented in such a short period of time. Whether they stem from negative impacts of the war in Russia, waged by Russia over Ukraine, on the macro environment with growing inflation, growing interest rates, supply chain interruptions, or actually bouncing energy prices in the first days of the pandemic, going down often by 2/3, now fourfolding compared to where they used to be. In that context, we have a highly profitable growth ahead. I have shown you the numbers for half year. The market continues to be very resilient and growing. There's a lot of new business opportunities where we continue our path. We have sector-leading profitability and intend to deliver so. We have a high level of efficiency, the way we are doing business. We are working on the back of a robust capitalization, and foremost, with everything we are doing, and this is the blood that is pulsing through our veins, we provide with a financing benefit to the communities. Thank you very much for your attention.